Imagine a deal so quiet, so invisible, that it shapes the fortunes of entire nations, and almost nobody notices. It doesn't happen on trading floors. It doesn't happen in boardrooms. And it certainly doesn't appear on the evening news. It happens every day in the background through a single, simple trade. And yet, this trade is the lever behind monetary power itself. It matters now because we all live inside its consequences. Your savings, your mortgage, your investments, even the price of a loaf of bread. Every decision central banks, governments, and institutions make ultimately ripples down to your life. And if you don't understand it, you can't see the rules and you can't play the game. Let's start at the beginning. Money is not just paper. It's not just numbers on a screen. It's a promise. A promise that someone somewhere will accept it in exchange for value. And in the modern world, almost all money is created through debt. Loans, bonds, credits. Every dollar begins as a promise to repay. Now here's the trade. One party borrows money and another party, often a central bank, a bank, or a government institution, buys that promise. That's it. A simple exchange. Cash for a promise. But simple doesn't mean harmless. When these promises are bought and sold at scale, they start controlling the rules of the system itself. They decide who gets cheap money, who faces expensive borrowing, and ultimately who can influence the economy. Here's where it gets uncomfortable. Most people assume money is neutral, a ruler that measures value fairly. But in reality, money flows where the trade occurs first. Not where the need is greatest, not where people are struggling, but where the buyers of promises decide to place it. It's like a tide that lifts some boats high and leaves others stuck in the mud. To see this clearly, let's follow the path of one simple transaction. A government issues bonds to fund infrastructure. A central bank buys those bonds. Suddenly, the government has money it didn't have before. Sounds benign, but notice the effect. The bank has now influenced which sectors get liquidity first. Infrastructure projects. Banks lending to connected businesses. Markets that react to the new money. Consumers, salaries, everyday costs, they come later, often too late to matter. This is the hidden mechanism. The trade isn't just between buyer and seller, it's between timing, influence, and access. Whoever executes this trade first holds power. And the math behind it is stark. If $1 trillion in promises enters the system today, the effect on assets is immediate. Stocks, real estate, commodities all adjust. But the rest of the economy, workers, households, small businesses, lags behind. By the time ordinary prices catch up, the initial advantage has multiplied. Some get richer, others pay more. The system subtly amplifies inequality. Without anyone pointing a finger, the trade concentrates power. Ironically, this concentration of monetary power is often hidden behind talk of stability or growth. Headlines celebrate rising markets, low borrowing costs, or successful stimulus. But those stories mask who benefits first and who bears the lag. The bigger picture is even more striking. This single, repeated trade underlies global finance. Central banks in one country buy government debt. Other central banks follow. Currency values shift. Trade balances adjust. Capital flows instantaneously across borders. The same simple mechanism drives global inequality, currency influence, and market momentum. Yet most discussions focus on policy, politics, or crises. Few look at the microscopic trade, the swap of cash for promises that moves the system. And here's the final uncomfortable truth. Because this trade is simple, it's invisible, and it repeats endlessly, no one really controls it. Even the largest institutions can steer the tide only temporarily. Momentum takes over. Expectation drives reaction. And human behavior becomes as important as numbers. Which raises a critical question. If monetary power is determined by a trade so quiet we barely notice, what does it mean for ordinary people trying to save, invest, or plan? Every decision we make is now influenced by the timing and access of money before it ever reaches us. And that influence isn't random. It's structured, deliberate, and repeated millions of times every day. So next time someone says money doesn't control you, remember the trade behind it. The simple exchange that shapes the rules, determines access, and quietly writes the map of economic power. And the hardest part? We may never fully see it, but its effects are unavoidable. The trade is simple. Its consequences are enormous. And we all live inside the system it quietly creates. Which leaves one question hanging in the air. If power flows through invisible trades, can anyone ever truly level the playing field? Or are we all just following the tide?